even those with a passing acquaintance of the US stock markets will probably have noticed that 2020 thus far has been a pretty wild ride. We entered the year with the markets, often as it does over the last decade, just drifting ever higher. Most of February passed with the market pretty much ignoring what was going on with COVID-19 in China, really regarding it as a Chinese problem. And then in the last week of February, the market absolutely panicked. Within 4 or 5 weeks, we saw the S&P 500 shed about a third of its value. And then in the last week or so of March, we saw the Fed step in and perhaps predictably cutting rates to zero, printing a lot more money, and the US Treasury borrowing like a drunken sailor on shore leave. So, that brings us, if you like, fast forward to where the markets are today, where we're only back down about 5% on the year. And I suppose the question now begs is, what is going to happen next? And no surprise is that it all gets a lot more difficult from here. Make no mistake, this has been a very good market for traders and perhaps for investors as well. It's very, very rare for a market to show this kind of volatility and the sort of size of the moves that we see without throwing up opportunities. But, where do we go from here? So what's the market's current thinking? Well, the market's actually quite relaxed about the state of the world. What are they thinking about earnings, for instance? Well, what they're thinking is as well, earnings are going to be down roughly 20% on the S&P 500 this year. Some sectors rather more, some rather less. Energy obviously is probably getting the brunt of the earnings downgrades at the moment. But next year they're expecting about a 25% increase in earnings. And where that leaves you at the end of 2021 in earnings wise is pretty much where we left off in 2019. So it's very much a V-shaped recovery that analysts are forecasting for company earnings overall. Now, this strikes me as being a little bit optimistic, because if you look at what the economists are saying on the macro economy, is they're saying, well, we're probably not going to see anywhere near all the jobs that have been lost thus far come back even by the end of next year. Figures I've seen at the moment, sort of maybe 70% best case scenario of those jobs come back. And I think those that are still in jobs perhaps are going to be a little bit more cautious. Now, bearing in mind that it's really the consumer that drives the US economy, and because this has been a global phenomenon, the US can't necessarily expect a helping hand from exports because the rest of the world's in the same situation, then perhaps, that earnings outlook is a little bit too sunny. One thing that I think is absolutely certain is that what we're going through at the moment and what we're now going to see is certainly going to accelerate a lot of trends that have been in place already. It's going to test some business models, in some cases to destruction. Some companies are clearly not going to make it. Some companies are going to get boosted. Now, the market has done, I think, a reasonable job at this point of differentiating between the winners and the losers. So, for instance, certainly they picked up on the fact that a lot of areas of things like e-commerce are perhaps going to show an acceleration. Things like online entertainment, online shopping, even online education are going to get boosted. What flows of that is, perhaps increased focus on various areas of enterprise software, cybersecurity, cloud computing, sort of all these sort of various tech areas. Now, as an extension of all this, if working from home becomes more normal, what do we do about a lot of this commercial real estate, which arguably has been something of a bubble in the US over the last decade or so? A lot of these buildings, are they just going to be basically left empty? And what does this do in terms to the psychology of the consumer as well? Yes, it's going to be a long haul in for some people to get back into work, but even those that are still in jobs, I think, are going to be more cautious. And returning back to our drunken sailor, the US Treasury, well, US Treasury is due to borrow $3 trillion in the current quarter. That's a lot of money. So, I know we're not going to discuss this in an election year, but it's very likely that we're going to see taxes rise. So, look, a lot of challenges ahead, a lot of opportunities. Keep your eyes peeled as ever for these trends that I'm talking about. And with that, I conclude. Stay healthy. Hope you're all healthy. Stay safe and be lucky.